Welcome back to the channel. All right, so today we are gonna go over just straight up TA. We're gonna look at all of the data between what's happened yesterday and what is going on today. The whole point of this now, the last video gave you a lot of the information you needed to get your mind out of the fear and get your mind into the logical, analytical, decision-making mode that you need to be to deal with this type of activity in the markets. If you're straight up having fear and you're just selling everything and you're like, I gotta get out, whatever your fear is, nobody makes good decisions when they have that fear. Fear is good when you need to like run from an animal. You know what I mean? Unless it's a bear, then you just play dead because you're not gonna run from a bear. You're gonna get caught. Anyways, but in this situation, you don't want fear to dictate you. So if you need any information on how to deal with the fear, go to yesterday's video. You'll see the thumbnails like Bitcoin drops 54%. Will it recover? Check that out. All right, today we're gonna get started with TA right away. We're gonna dive right into Bitcoin. But before we do that, make sure you like, make sure you subscribe, make sure you follow me on Twitch and on Twitter. Links are in the description. Let's go. Okay, so we are on the 1 hour time frame for Bitcoin. First thing that we see here on Bitcoin is, so there's a reason in yesterday's video, I drew out a pattern for how I anticipated that this recovery was gonna look, right? And if we go over to my Twitter, I had actually posted a screenshot. I didn't save it. I don't know why I didn't save it, but I posted a screenshot of kind of what it looked like. So here was a screenshot of the drawing, okay? This is the hourly time frame, okay? So you'll see that this here kind of matches up with this here. This goes to here. So basically, when you see this dip, the line at the top of the dip, if you go to the right, that's here. That's the green line. So we are basically right at this portion between 40 and 42, which is right here. It's just the scales are different, right? So what we would expect if this plays out is for this to go up to 50K. The question is, are we still looking like this is following? So if we switch over to the Bitcoin chart, you'll see that we had one drop here, we had another drop here. If you go back to the screenshot, we had one drop and then we had two tiny drops, right, that were drawn in here. So these two tiny drops, we may still have one more. I mean, if it didn't actually finish, we might have one smaller drop and then we could have a pump up. Now, I'm not saying that that drawing that I did is going to be 100% accurate, but there's a reason that I drew that. The reason I drew that is because you have to assume what is going to happen in these markets, right? There's going to be people down here that want to sell because they're scared, but they don't want to sell at a loss. So they're like, I'll just hold on. Maybe it'll go back up, then I'll sell. So then the price goes up and then they're like, oh, it's gone back up to 40. Okay, let me sell. And then the price dips again because you still have some people that are scared that didn't want to sell at 30 or 35, but they're okay with selling at 40. So they sell, you have people buying it up. Probably the same people that were buying here. Now, you have this movement going up. This other dip will just shake out a lot, the last few like scared hands. And then what I would assume is that we have a bigger move up. That would be the assumption. Now, I could be wrong on that, right? Even if it turns and it comes down, the only thing I'll say is I don't expect it to go past this golden pocket. This is around the 35,000 level. So if it goes anywhere, I would expect it to be in that area if it drops. I doubt it's going to go back to 30K. Some people are saying it could go down to 26. Even I told you that yesterday, that the longer term golden pocket is sitting at around 25, 26,000. It's still a possibility, but the data isn't showing us that that's what's going to happen. Granted, the data wasn't showing us that we were going to go to 30K either. So when we were doing chart analysis up here, we didn't predict 30K for a reason, right? Because none of the data was telling us that we were just going to fall through this support. So because of that fact, since we had a lot of people with a lot of Bitcoin dumping at the same time, we fell through there. There was nothing we could do about it, but you can't predict that. The reason I mention this is because if we are going to have a drop to 25,000 or 15,000 or whatever the hell, I doubt 15,000, I don't mean to scare you guys, but if we are going to have another drop, there's no way that the data we have right now is going to predict that. What we are seeing now is decent sized volume. We're seeing on the daily or on the 1 hour chart, we're seeing a lot of upward momentum and strength. So this tells me that this is looking like basically the price is getting squeezed and it should break out of it at some point. So we have to keep an eye on it, right? A good thing to always do to shake out the last week hands is to set up a pattern on the charts that looks like it's going to go up and then have one final dip. And that's when people freak out. Okay, it's dropping again. They sell, price dips back to 35, comes right back up. So any of that could happen, especially looking at the hourly. The other things that I see that are interesting on the hourly is that the MACD here is undecided. So let's make this bigger. Okay, that's not what I meant to do. Okay, let's make that bigger. So this is the MACD. All right, so the MACD for Bitcoin, what you can see here is that basically it's been moving upwards on the hourly. This has been like the recovery area. This was the drop, right? This was the big dump. So now it's been going up on the hourly. We had a couple of tiny dips, but look at these red candles here on the MACD as compared to the green ones, right? We had a lot more upwards price momentum. Here, we are basically undecided, right? We started going up, we started going down, so we are undecided right now. So we don't really know exactly where it's gonna go. But one thing that I do like is when I switch over to the 4-hour chart, we start to see that we are, on the 4-hour, we're starting to touch this 200 exponential moving average. We're actually hitting it as resistance, and we're basically trading right below it. So a good thing to see here now is going to be for us to move above this level, which is basically at this point above 41.5. Once we're above 41.5 and we go above it maybe to around 42.5, so about 1,000 above, if we come back down and get support on this moving average, that's a really good sign. That means basically that we have flipped this level from resistance to support. That's a good upward momentum thing to see. Obviously, I would much rather have us just go straight up to 44,000 and then flip it, but I don't know if that's what's going to happen. I think seeing smaller moves right now wouldn't shock me, but also seeing one big buy candle wouldn't shock me, because two things happen at these prices, right? People have already experienced 60,000 and 64,000. Because they've already experienced that price for Bitcoin, if they start to see it shoot up, you're going to see a lot of FOMO. You're going to see people coming in and just buying because they don't want to miss out. And when that happens, you have a lot of buy pressure, and now the sell pressure is starting to disappear because everyone's starting to get rid of the fear again. As the fear goes away, less people want to sell, less sell pressure. If buying pressure comes in, the price will shoot up. So keep an eye on that. When we see this moving average flip, how far ahead of it do we go? If we go high enough to break around 45 or hit 45, and then we start hitting this 100 exponential moving average, that's going to be, actually, this isn't even the 100. Hang on. Wait a minute. I got my moving averages all wrong. Hang on. Let me check my colors. Yeah, I'm so sorry. I'm totally wrong on the colors of these moving averages. Okay, so this is actually the 20 exponential. The 20 exponential that flipped lower. So the 20 exponential moving average is the one that we want to break. I'm sorry, I said 100. The 100 is the red one up top. So it's because we had a death cross and we came down, right? So the 20 exponential moving average has moved down. So we want to flip over the 20 exponential moving average, and then if we start coming close to the 50 exponential moving average, we want to see the price continue moving up. But the question is, are we going to hit resistance on this moving average of 45, or are we going to break right through it? Now, this is 4-hour time frame, so we're talking anywhere between 16 to 24 hours that we have to look for this kind of activity. Let's move on to the daily chart. All right, so the daily chart, you can see here that the 20 on the daily is actually starting to cross now over the 100. So the death cross is getting a little bit bigger here. Obviously, that's going to continue happening until the price moves further up. The goal with the daily chart now is to not have this 20 exponential moving average keep coming down, and we do not want it to cross the 200, right? If this 20 exponential moving average comes down, which is the blue one, we do not want it to get crossed with the 100, which is the red one, because if that happens, that's a very bearish signal. You know, that is telling us, let me see if I can make these moving averages a little easier for you to see. Okay, we have, the colors are actually not bad. Maybe I'll hide the fib. Let's hide that. There we go. That's better. Okay, so if we have this moving average here, the 20 cross below the 200, then that's a bad sign. So keep an eye out for that. The goal to see over the next few days is to see enough price momentum that we move up to at least 45 to 48,000. And once we get to that point, this moving average should start to turn very slowly, but the 20 should start to shift. We want to see this 20 exponential moving average on the daily chart shift. We do not want to see this downward slope on it. The downward slope on this moving average is not good. On the daily, that is a sign that the price is very weak, that the momentum is very weak. It could be changing, right? Because the price has to start moving up for this moving average to change. But that's what you got to keep an eye out on for the daily. Let's move the chart over a little bit longer to a bigger time frame. Now, when we look at this time frame, what we're starting to see here is that it looks essentially like the price is starting to get squeezed at this moving average. The price has been here. It's touched here once, it's touched here twice, and I'm fairly certain that it's going to come back to this 42 level sometime in the next, in the next 6 hours, maybe less than that, and it'll probably get hit there again. So on the 200 exponential moving average on this daily chart, we really want to see us go past this level. Just like we saw in the other chart, 42,500 is a key price that we want to hit and we want to hold. So that's kind of what I'm looking at for this right now. I'm not seeing any major concerns with bearishness because honestly, even if the price comes down to the 35 level, I expect it to get bought up very quickly, just in case. If I decide that, if I think that it's going to go down to those levels, maybe I'll place an order there. I don't have an order here for Bitcoin right now. I already picked up the Bitcoin I wanted at around 30K, like right around 30K, like 30,100. So I already have the Bitcoin that I wanted to grab for the next few weeks. My dollar cost averaging for the next few weeks, I did it all on the day of the drop, right? I put in bigger orders just in case, and I cannot believe that they triggered. I was in total shock. And let's see, now if we move on, I'm going to switch over to the Binance chart real quick. The reason I'm switching is this is the Coinbase chart, so I want you to look at the volume on Coinbase. And you'll see there's a lot of just red volume, especially if we go over to the 4-hour chart. You see the difference now? You have all these red ones here. Let's go to the chart on, and look at this number here. This is, oh, you can't see it. Hold on. Let's go like that. Okay, so this is the chart right now as we look at it on Coinbase. I'm going to bring it down a little bit more. This is the volume chart. So you see here basically the volume for the last, like these are all 4-hour candles, has maxed out at around 10K during this time frame. This was about 8 to 12 hours ago. So now if we switch over to the Binance chart, what you can see here is there's a lot more volume on Binance, right? You see a heck of a lot more volume there. And when you see a lot more volume, the interesting thing about that is that you can get a better idea of what's happening. The more volume we see on this volume chart, what we can see it's happening on Binance is that a lot of buying has been happening. The majority of these 4-hour candles on the Binance chart are showing us that they were all buy candles. You did not have very many candles after the drop that were significant with sell volume. So that's a good sign, right? That also shows you strength, and that's the reason I wanted to show you that. So that's pretty much it for this. I mean, I would draw some patterns for you, but honestly, there's no reason to really draw anything because I would be drawing very simple patterns, and I think at this point, some of you guys have already learned those things. So if we go over to hourly, for example, what I would be doing is something like this. I'll just show you what I was drawing earlier, right? If I draw out a pattern right now, what I'm seeing is that we're putting in a resistance line, and we clearly have a trend line of support. Right? This is our trend line of support. It's where we are hitting the most support. We dipped below it a couple of times, but now we are getting support at this apex. If we go past this, Casper, thanks for following. I appreciate you. If we go past this apex, normally what you would expect is that you would have a move to the upside happening sometime soon with a triangle like this. That's what I'm expecting is going to happen. The chart is pretty clear on that, but you can never discount the drop. So I want you to stay ready for that, even though this is looking like it'll move to the upside. The volume is on our side. The RSI is on our side. The MACD is on our side. Even the moving averages are. On the hourly, we have already gone above the 20 and now the 50. So if it continues to move up on the hourly, we're going to start having a golden cross appear very soon, and these moving averages will start moving back up to the upside on the hourly. So following the hourly right now is really giving us the best data. Ghostly, thanks for following. I appreciate it. All right, next thing we're going to do is we're going to take a look at Ethereum. We'll come back and we'll take a look at Bitcoin right before we finish for the day, just in case there's anything else that happens between now and the end of the video. So we'll switch over to Ethereum real quick. Ethereum, you're seeing something very similar happen. The squeeze is actually a lot more clear on Ethereum. You can see it happening here on the hourly chart. It is basically the price is getting squeezed between two moving averages. It's getting squeezed between the 20 and it's getting squeezed between the orange, which is the 50. So the 20 and 50 exponential moving averages are squeezing the price. It's happened for the past more, longer than that, 4, 5, 6, 7, 6 to 8 hours, the price has been getting squeezed in here. Eventually, after a price squeeze, you're going to have some type of move. Usually when you have a price squeeze like this, it's indicating that there's a lot of pressure building up, that people are, the bulls and the bears are fighting, right? People want to buy lower, people want to sell higher, and the price is just getting, the price range is getting smaller and smaller and smaller. As that happens, the price usually breaks out. So sometimes it breaks out to the downside, sometimes it breaks out to the upside. The way that you gauge which way it's likely going to break out is you take a look, Prizzy, thank you for following. You take a look at the trend, right? The trend in this case is moving up. So I would assume that from this side, if we have a breakout and the price keeps getting squeezed, that we're going to have an upwards breakout. But I don't know, right? TA is not like fortune telling. Thank you for following. I missed who that was, but thank you. I appreciate it. So keep that in mind. TA is not like anyone who, this is what, one thing I don't like about some crypto TA YouTubers is that they say that, hey, you know, like this is going to happen, the chart's saying this, and then when they're wrong, they don't say anything. Like if I'm wrong, I'm wrong. But I'll tell you up front that TA is not fortune telling. Right? It's just another tool in the toolbox. That's all I use it for. So I suggest you use it for the same. It gives us an idea of what may happen, but you can never predict anything. That's how we didn't know it was going to drop to 30, right? Or on Bitcoin. So in this case, with Ethereum, the strength is still looking good. We need to turn on the fib retracement and take a look at that. Let's, where's our fib? Okay, so let's go to Bitcoin here. We'll switch to our actual Ethereum chart. So on this Ethereum chart, you can see that right now, the price is actually trading right at the golden pocket. Usually what you see, all right, this is kind of a rule of thumb for the golden pocket. When you're in that golden pocket area, that, you know, that general 0.65 to 0.618 area on the Fibonacci retracement, when you're there, it's an indication of a turning point of the asset. So usually when you fall below it, and then you get rejected from it, that's an indication that you may have more downside. In this scenario, we have hit resistance on it, we're hitting support on it, so we really want to see Ethereum break out of it. That's what we want to see. We have on the 4-hour chart basically a full death cross. You have the blue moving average that's crossed all the way below the red. Completely full death cross, but the reason that you have that death, well, I guess the full death cross would be when the orange passes too, but the main reason that you have that death cross is because Ethereum was very overextended before this drop. So it took a much more massive drop than anyone would have expected for Ethereum. If I told you last week when Ethereum was going up to 4,400 that, hey, Ethereum is going to drop all the way back down to 2,000, you know, you probably would have thought I was crazy. So the fact is that it had that big of a drop. Seeing movement at this golden pocket is going to be really key. We want to flip this golden pocket. We want to turn this into support, right? If I look at the similar chart for Bitcoin, it didn't even go far enough to hit the golden pocket that we were looking at 2,500. Ethereum did, because Ethereum got a lot more overextended. So seeing Ethereum move out of this is going to be key. On the 4-hour chart, we're seeing a lot better RSI. The RSI is not oversold anymore. It's actually sitting at the 40 level, which is normally a very good level for upwards price momentum. The MACD is also starting to flip. If I make that a little bit bigger, you can see the MACD is going into green. So hopefully that continues. We'll see how it goes. Let's look at the daily chart for Ethereum, and then we are going to switch. So the daily chart for Ethereum is also looking really good. The daily chart for Ethereum actually looks a lot more like a typical consolidation move. You see that it's following the 20 exponential moving average. You have the drop. You come down and almost touch the 200. You get support at the 100. You get a little resistance at the 50, you go sideways, you get squeezed between the two moving averages, you shoot back up, and you get back up above the 20. You might even trade under the 20 for a little while. So there's a good chance that as Ethereum moves up, if it takes a week or a couple of weeks to break back out to old levels, it could be sitting under this 20 exponential moving average for a while. You might see it get squeezed between 2,000 and 3,000 for a little bit, and then have it go back. It's going to take a little bit of time for the prices to get back to where they were, but I think they will get there. I think it's just going to take some time. So getting through that time is the key, right? How do you get through it? Are you just going to wait it out? Are you going to take advantage and buy at discounts? That's what you got to figure out, right? Because these opportunities don't come too often in a bull market. In a bull market like this, and if you look back at the prior years of Bitcoin, The bull markets have maybe 2 to 3 opportunities for big drops, and we've already had our first one. So you may not see the next big drop like this until the price of Bitcoin is like reaching 75, 80, or even 100K. It might be a while until you have a big, massive 50% drop again. So use this as knowledge for the next time. Ethereum otherwise looks good. The support levels are solid because it traded here for so long. So as it starts going up and putting in more volume, these support levels are going to look even better because there's a pretty big gap between 2,700 and 3,200. And that's also why I think that we're going to squeeze in some additional trading there, because on the right-hand side, you can see there's quite a big gap right here. So filling in that gap with a little bit more volume is going to make this overall trend for Ethereum look a lot better. But all in all, I mean, Ethereum's looking pretty strong. Even the RSI is looking really, really good here. I hope this helps. I made my RSI lines a little bit brighter for you guys. So RSI is looking really good. Exitum, thank you for following. I appreciate it. And even the MACD, you guys, even the MACD is looking good. And you'll see here that the MACD is starting to turn white. And so we're starting to get out of that red area on the MACD. Even though the one thing that's interesting about Ethereum, I mean, okay, so I want you to take a look at this, all right? If we look at the Bitcoin daily chart, take a look at this. Okay, so if you look at the Bitcoin daily chart, this is Bitcoin. We're looking at the daily. We're going to compare this to Ethereum. So you see here where the MACD is on the Bitcoin daily. Look at these two lines. These lines, these averages on the MACD. First of all, the blue line went under the orange line. That's a bearish cross on the MACD. So that also indicates that the price is likely going to go down. But the lines are below the zero level. Right? These lines are at the bottom. If we switch back to Ethereum, even throughout this big drop, the lines didn't even go to the bottom. The reason is because Ethereum had been so bullish for so long and the price had gotten so overextended that even this huge drop didn't take it down. So the price would have to go down to like less than, not less than 1,000, but probably like 1,500, 1,600 for this to go into the negative zero area. So this is probably the only thing that is slightly concerning, because normally even during a bull market, you're going to see a few drops that may take this MACD back down below, take these lines down below, but we haven't seen that yet. So that could just mean more sideways trading at the very least to bring these lines a little bit lower to the zero level. That's also possible. But for right now, I wouldn't be super concerned with this, but I would keep an eye on it on the long term, right? We want to see, are these lines on the MACD ever looking like they're going to flip? It doesn't seem that way. Doesn't seem that way. So I'm not bearish on Ethereum right now. I'm actually quite bullish on it. I haven't sold any Ethereum. I bought a little bit during the dip, not a lot, because I actually put more of my liquidity into Bitcoin. I already have the amount of Ethereum that I want, so I didn't really need to buy anymore. Then we go over to EGLD. All right, with EGLD, it's looking very similar to Bitcoin. The only difference is that if we switch over to the 1 hour chart, that we are not quite as squeezed between these moving averages yet. It looks like EGLD is starting to move over on the hourly, this 20 exponential moving average. So we want to really see, we want to see it getting squeezed between these two. Right now, a lot of this activity on the hourly was us getting resistance at the 20 exponential moving average. Now, right now, when we're sitting at 115, we are actually starting to go above it again. We actually broke it once, right? During the initial uptrend, when we broke past 100 again and we came back into this level, we actually hit the 50 exponential moving average. We got resistance on it. We actually traded on it for a little while. Then we came back down and got resistance on the 20. So the key here also is to see, is the price going to get squeezed between 115 and 120, or are we going to break above this and start trading at 120 to 125, getting ready for newer highs? I would be looking, I haven't even been looking too closely at the EGLD chart right now, because EGLD is following so close to Bitcoin. Bitcoin and EGLD look so similar right now that it's quite clear that the direction of Bitcoin is what's dictating a lot of these other coins. I mean, look at these charts, right? I'll switch between them. This is Bitcoin, this is EGLD. They look almost identical. You start to see a little bit of difference, like there's a little bit more bullishness here in the way that you have much more narrow uptrend lines on Bitcoin on the hourly, whereas you have a little flatter lines on EGLD. Doesn't really mean a whole lot. It just means, it could just mean that eGold has been waiting for Bitcoin to make a move. The reason, so people have asked me this on Twitter, like why do these things follow Bitcoin? Why do these other assets follow Bitcoin? Well, you have to understand that Bitcoin is like where the majority of the liquidity is, right? If you look at the market caps of all cryptocurrencies, the majority of the market cap sits in Bitcoin. Now, because of that, that's where the money is. Now, if the money is leaving Bitcoin, that means it's leaving the crypto space. If it's leaving the crypto space and altcoins are going down, then that means that money that's leaving Bitcoin, it's not going into altcoins. Otherwise, the altcoins would be pumping. So if the altcoins are going down and Bitcoin's going down rapidly, then the altcoins are going to start dumping, because that's how market sentiment is decided by a lot of people that buy and sell these assets. And usually that determines a lot of price action. If Bitcoin's stable, then altcoins can do really well because liquidity isn't leaving the marketplace. As altcoins are normally going to do very well when Bitcoin's sideways, because the people trading altcoins know that, hey, when Bitcoiners want to start diversifying, they're going to buy the altcoins from us. So they want better purchases on their altcoins, so the altcoins go up. So it's a gauge of liquidity. It's a gauge of sentiment. So during these big dumps, when Bitcoin has a huge dump, and then you see the same thing happens on altcoins, it's very common to see a lot of altcoins follow the Bitcoin chart. I mean, even if we go to like Polkadot, yeah, look at Polkadot. It looks so similar too. It's trading exactly like Bitcoin and eGold. We go to Cake. Cake is also trading very similar. Cake looks a little slightly bit more, actually it looks a slightly bit more bullish right now, but it looked a little bit more bearish when it dropped. Now it looks a little bit more bullish. It's up to 21. But overall, this is going to be a very standard chart pattern for a while. And once Bitcoin starts to recover and it's stable again, then you're going to see all these charts start deviating again. So for right now, watching Bitcoin is very important, even when you're looking at alts. Make sure you're doing it. If you're ignoring the Bitcoin chart, then you're doing something wrong. You shouldn't be ignoring it right now. Okay, so eGold, otherwise, nothing concerning here. I'm loving the fact that we're putting in so much volume at this level, 115, 116. Not so much because the price is down here, because I think it's very undervalued down here, to be honest. But I like the fact that people are able to get in at this price, because a lot of people are going to like those value buys. It's going to bring a lot of new people into the space. They're going to start to learn more about staking. They're going to start to learn more about the Maiar app and what's coming up with the exchange and the DEX. So Alfred Wallace, thanks for following. So this is a very good way to bring new people into the space. And what really matters long-term is adoption. And if you're holding eGold and you're staking it and you don't plan to sell it for a few years or at all, then, I mean, granted, I always say that even if you love a project, always think of an exit strategy at some point in the future, right? Whether it's 1 year, 2 years, 3 years, 5 years, whatever it is, you know, think of a time that you want to pull out 10% of profits or something. That's how you get money on the side for dips, right? If you're never taking out any liquidity and you're not putting money aside to buy on dips, then you might not ever get that opportunity. So always make sure you're doing that. As far as eGold goes, if you're planning to do that for the long term, like hold it for the long term, then you shouldn't really care about this dip. For example, on my side, I didn't even unstake my coins. I just left everything staked, because why would I? You know, the only thing I haven't done yet is all the new eGold that I've purchased during the last week or so while the price was dropping. I haven't staked it yet, because I plan to keep watching the price, and if I decide to buy more, you know, I'll probably be a buyer all the way up to 140, 150, you know, until it starts hitting that level. I may buy a couple of more times. You know, I bought a little bit down at these levels. I got some for like around 80, 85. I didn't get any when it dropped down to 70, unfortunately, but I managed to pick some up while it was at these levels for a little bit of time. So I got a little extra eGold, and I may keep getting some. So until I make all the purchases I want, it's going to sit on the exchange. Then I'm going to move it all over to my Elrond wallet and then put it into staking. But figure out how it is you want to play this, because if you're in it for the long term, then you should basically just be using the charts to figure out when are good buy points, right? And right now, honestly, this entire area of 100 to 115 is a great buy point, because you could have another dip down. So setting an order at like 105 would be a terrific idea if you want to try to pick up some value eGold. But you never know. It may not go there. It might just keep going up and trading between like 117, 118, and 120. And then, you know, it could just shoot up after that. that's pretty much it for EGLD. Nothing bearish here right now. It's following Bitcoin. So as long as Bitcoin is doing what it's doing, which is getting squeezed between these moving averages and starting to look like it's going to break them, then we're looking good. We're going to come back to Bitcoin. Looks like it's getting closer to the 42 mark again. So we'll come back and check it out. Finally, Cardano. Cardano on the daily chart, it's actually looking more bullish than a lot of other coins right now. The recovery has been really good. It's back to the 186 level. Keep in mind, the last time it was at the 186 level is not that long ago. It was like 2 weeks ago that this was the all-time high. So it's already done a massive recovery. If you were able to pick up any Cardano at $1 or anywhere else, $1.15, $1.20, you have had terrific returns since then already. I mean, think about it. If someone had the ability to not let fear guide them and they were able to buy some Cardano when it dropped, they are already up almost 100%, 92%. So buying Cardano at this drop would have been absolutely terrific. Personally, I didn't buy any Cardano. It wasn't on my radar. I already own a lot of Cardano. I bought most of my Cardano at around 8 to 10 cents. So I don't really need any more, but I guarantee you that this would have been a perfect time to buy. So I hope you were able to pick some up. And to be honest with you, even where it is now is not a bad place to buy. If I was looking to buy some Cardano, I would probably be putting my buy order. Actually, you know what? I might just buy spot. If I was buying Cardano, I might just buy it at this price. It's a pretty great price because you see here, the last time we traded in this area, we were not trading here very long on the 4-hour before we broke through. So, I mean, there's a chance we could trade a little bit more and even drop down to 165. So maybe as a safety, I would, if it was me, I would put a buy order at like 165 or 170, and I would buy some at spot. That's kind of how I would do it. Like if I wanted to put $1,000 into Cardano right now, I'd probably buy $500 at the current price, put $500 at $1.65 or $1.70 to be safe, and just leave it there and see if I get lucky. But yeah, Cardano's looking great. Not much to say here. It's also getting squeezed on the moving averages on the 4-hour. Everything is looking good. Now, okay, this is the main reason I wanted to do this video today, even though we don't have a ton of data yet. The reason I wanted to do this video today is because of two things. Number one, everything's looking good. That's a great thing. It's nice to see everything looking good. It's good to see Bitcoin hitting 42K. It's good to see Bitcoin possibly breaking above this moving average, and we might even get a golden cross on the hourly while we're talking. These are all great things, right? But what I want you to keep in mind is that there is such a thing as a fake out. Fake outs can happen, and they have happened numerous times in drops like this. You start to have a recovery, and then you have another massive dip. Usually that second dip doesn't go below the first. So if we were to have a massive dip from here, I'm expecting it to end between 34 and 35,000. If that happens, it's going to shake a lot of other hands out. It's going to freak a lot of people out. So my suggestion would be to be ready for something like that, just in case something like that's going to happen. Have a couple of orders. You may not get them, but you might. So it's not going to hurt you to have them down there. And, you know, just keep that in mind. Things are looking good, but you always got to prepare for the other side. So that's it. I'm prepared for both sides. I've used up most of my liquidity for now, so I'll have to wait a little bit of time unless I want to go into my cash reserves to buy anything. If I get a massive discount, if we have another huge drop, then I might dip into my cash reserves and buy something. But for right now, I don't really plan on buying anything else, but I am watching everything very closely. I hope you enjoyed this, and hope you come back for more to the next time. I'll catch you later. Peace.